That's my point, right? They have a brand new multi-billion-dollar facility in Shanghai, right? So no matter how many gains they made on operating leverage, if you have a new facility, you're going to have a significant increase in expenses, and their expenses are actually falling. So my point is, where are the costs associated with Shanghai?
Hey, I'm Steven and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. Today we're talking about my favorite Tesla bear, Gordon Johnson. Mr. $87 price target before the Tesla split. I think it's a $19 price target now. Gordon Johnson did an interview with Rob Mauer over at Tesla Daily recently, giving his full bear thesis on Tesla. There's a link in the description. Please go check out the interview. It's wonderfully informative, if not incredibly frustrating to watch. I'm really enjoying these long-form interviews, bull versus bear debates that Rob is doing. It's really insightful to learn a little bit more about the actual perspective and the real thesis that these shorts, shills, bears, dingbats, whatever else you want to call them, actually have regarding Tesla. In the mainstream finance media, somebody's on a segment, they might only have 30 seconds of talking time, maybe a minute and a half max. So they're throwing points out there. There's not really much time for discourse, discussion, and going deep. However, this interview with Rob was a great insight into Gordon's thesis about Tesla, or the tactics he's using to suggest that he has a bearish thesis about Tesla that may actually not align with reality. Did I say that, or did you guys? I think you guys just imagined that. I definitely didn't say that out loud. You're imagining that. And as I've previously said on the channel, if Gordon Johnson appears anywhere and says things about Tesla that I take issue with, I'll be here to make a response video because I can't let this stuff slide. So let's see what Gordon, $87 price target before the split, Johnson had to say about Tesla stock. But first, hey guys, if you're in the US and you'd like to help out the channel and get a free stock, check out the link in the description to WeBull. If you open a new account and fund it with $100, you'll get a free stock valued up to $1,600. And if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it. And before we dive in, I just want to make one thing super clear. I have nothing personal against Gordon Johnson or any other Tesla bears or short sellers. There's no ill will here, no emotions. It's nothing personal. The only thing I care about is the truth. And if there appears to be something or someone between me and the facts, there may be a little collateral damage. Nothing personal, but my allegiance is to the truth, not your feelings.
The company is not growing. That's number one.
2 seconds into the discussion, and already Tesla isn't growing. You got to be fucking kidding me, dude. It's not worth even discussing this. What the fuck?
Number two is, if you look at their market share in Europe, which is the most highly competitive EV market in the world, their market share in Europe essentially went from roughly 35% in the fourth quarter of last year to single digits as of right now. So they've lost considerable market share in Europe. Excluding credit sales in the second quarter, they burned $300 million in cash. They lost $300 million
on the
net
GAAP
income
profit line, but not necessarily free cash flow.
Well, how do you define free cash flow?
Well, GAAP profit includes stock-based compensation, which is obviously a non-cash cost. So I think a better, if you're going to say they're burning cash, you should probably be talking about the actual cash flow line, right?
Well, no. So,
spoiler alert, I've actually seen this interview. I watched it live. I know what's coming. Are you ready? Gordon Johnson is going to employ tactic number 1. Do not answer the question. Dodge it. Deceive. Hey, look over there. Something's on fire. Quick, put it out. There's a fire over there. I'm not going to respond to that question because it'll make me look like a moron and disprove my thesis.
If you're going to say they're burning cash, you should probably be talking about the actual cash flow line, right?
Well, no. So if you look at Tesla's free cash flow, the way they define it, answer me this. How does their operating expense stay the same despite having a new facility in Shanghai? How is that possible?
Tactic number 2. Say something incredibly bullish, but try to spin it as if it's bearish. Now, the point Gordon is trying to make here is Tesla's been expanding, building new factories, etc. Yet, their capital expenditure, their costs seem to be flat. This must mean that they're hiding things somehow in their books, because it's not possible that they could be building new facilities and expanding, yet their costs remain flat. Unless Tesla's becoming really, really efficient at building things cheaper than the last thing they built, which is what's happening. This is a bullish point, Gordon, not a bearish point. But again, the tactic here is try to spin it around and make, oh, well, how is it possible? Let's just explain that. How is that even possible? I'll tell you how it's possible, Gordon. Tesla has very big-brained engineers who are figuring out how to make things cheaper and do more with less. It's called being resourceful.
How can your expenses be the same despite having a brand new facility? Even if you had significant amounts of, advances in costs, you're going to have higher costs. Their costs are actually declining despite having a brand new facility. So I believe that when you talk about free cash flow, I believe they're capitalizing a lot of items on their balance sheet which aren't making it to the cash flow statement.
Okay. Yeah, and I mean, that's a fair point of view. I think one of the bull cases on Tesla is that they have been generating a lot of operating leverage over the years. I think previously they were running at a point where the operating expenses were pretty high. They had room to come down in selling general and administrative costs. They've done that. They had room to come down in R&D, or at least hold that steady as revenues have increased. So I think if you look at the operating margins that Tesla has generated and the operating leverage, it's scaled significantly. Operating expenses are up 80% the last 3 years versus revenue almost has tripled, or even more than tripled, up about 250%. So I think that's, when we're talking about the fundamentals, and you've made a lot of points here that I want to come back to, a lot of them, and have a more robust discussion about all of them. I want to give you the opportunity to present your case first. But I think if we talk about the operating leverage, that's something that has improved dramatically for Tesla over the years. And you could say, okay, maybe they're hiding some costs in there. Or if you want to take a more bullish perspective on that, I think you could view that as a good thing, that Tesla has found ways to grow revenue while cutting costs.
Rob is far too diplomatic in my opinion. Isn't it great? We've got the yin and the yang of Tesla coverage on YouTube. Rob is so polite and reserved and constrained. And then there's this guy.
That's my point, right? They have a brand new multi-billion-dollar facility in Shanghai, right? So no matter how many gains they made on operating leverage, if you have a new facility, you're going to have a significant increase in expenses, and their expenses are actually falling. So my point is, where are the costs associated with Shanghai?
I think it's a valid point to be looking at the financials closely in that manner, but I also don't know that it's entirely fair to just assume, because essentially that would be accusing Tesla of being fraudulent with their accounting, correct?
No, I'm not making that accusation at all. I'm saying, how is it possible, right? I'd like to know where those expenses are. We're not making any accusations. I'm just trying to figure out how your operating costs stay the same when you have a new facility. That is minuscule, and that's despite the fact that pretty much every country in the world is throwing billions of dollars in incentives at auto purchasers, saying buy an EV, will essentially pay for 20-30% of the car, and despite that, the market share is negligent. So to say that EVs are disruptive, the data the numbers just that's completely wrong.
Well, even using those numbers, if you go from 0.3% to 1.7%, I mean, that's still 6x over less than a decade. I would still say that's pretty significant growth.
That's crazy. That's crazy. So in the
it takes
US,
time. It takes a lot of time to build these businesses.
Well, no. So in the US, those same numbers. All right. So let me say this then. In the US, their numbers have went from 0.3% to 1.9%. Right, 2011 to 2019. However, pickup trucks have went from 50% to 70%. So to say it's 7 times. I mean, again, you're not getting billions of dollars in incentives to buy pickup trucks.
Tactic number 3. Try to pull one over the eyes of the mathematically challenged. Let me explain something, guys. Going from 0.3% to 0.6% means you have doubled your market share, increased 100%, just from going from 0.3 to 0.6. This carries on. You get to around 2%. You've increased by many multiples, okay? Well over 100, 200, 300, 400, 500, 600% growth in market share versus pickup trucks going from 50% to 70%. Great. That's a 40% increase in market share. 40%, hundreds of percent. 40%, hundreds of percent. This is a trick. And the only people who will be fooled here are people who just don't understand how numbers work. Not a judgment, just a fact, okay? This is magic with numbers for people who don't understand how numbers work. Welcome to today's lesson of how to use numbers. Are you guys ready? We're going to pretend we're electric vehicles starting with a 0% market share. And what we're going to do is we're going to double that market share starting with a 0.25%, 1/4 of 1% market share, and see how long it takes until we have 100% market share. This is what a disruption looks like. Are you ready? 0%, 0.25%, 0.5%, 1%, 2%, 4%, 8%, 16%, 32%, 64%, more than 100% in just 10 doublings. This is a disruption. These numbers matter.
But that's what people are buying. So to say that the technology is disruptive at 1.7% market share globally and in the US, that's just wrong. It's just not right. If the technology was disruptive, they would be taking over.
Please refer to my previous point and have a nice day.
But what I'll say is, it's just you're not seeing the disruptive technology that everybody's saying EVs are. And if you want to look at real disruptive technology, look at pickup trucks, right? That's the preference. That's what people are buying. 20% market share gain over that time frame, whereas EVs have gained like 1.5% market share. But it doesn't really matter what I think. That's what's beautiful about numbers. The numbers are what they are. The numbers show that pickup trucks have went from 50 to 70% market share. EVs have went from 0.3 to 1.7.
Please, Mr. Johnson, score another own goal. I really enjoy watching you self-immolate. Now guys, just for those watching at home, ready? Pop quiz. Which is a higher number? Which is a larger percentage? 600% or 40%? Leave your answer in the comments.
But on the growth story, I guess I don't understand how it's fair to say that the growth story is over and then also be projecting the best quarter, even excluding the regulatory credits, which I think we can go into more detail on. Even if we exclude those, you are forecasting as the most significant bear on Wall Street, you're still forecasting for huge quarter over quarter revenue growth from their all-time highs. So how does that, I understand your point on profitability, that's important too, but you're just assuming because price cuts have happened that the margins are going to decline. If we look at Tesla, that's what they've done throughout their entire history. They've lowered the prices of their cars and their gross margin has remained relatively stable.
I'm just looking at the numbers historically, right? Historically, their revenues peaked in essentially the fourth quarter of 2018. Their margins peaked in the third quarter of 2018. No one can refute that. That's a fact, right?
It's not entirely factual. They did have a quarter higher than that since then.
Right. I said essentially. It was modestly higher, maybe like 200 million. But I think that was the fourth quarter of 2019.
Tactic number 4. Outright lie, but use a modifier to sneak it in there, essentially. So that if anyone calls you out on your bullshit, you can say, oh no, I said essentially. But then why would you say that at all? Because it's not a point. What do you mean their revenue essentially peaked in this quarter? They've since posted higher quarterly revenue. So what the fuck, dude? Dishonest. Not cool. Don't.
But in both the first and second quarter, their revenues are below the fourth quarter of 2018.
So
and their U.S. revenues did peak in the fourth quarter of 2018. There has been no quarter where the U.S. revenues have been higher. Keep in mind, this is despite the fact that they have another facility in Shanghai and another model in the Model Y, and yet they're not selling on a revenue basis. They're doing less than what they did before they had another facility, another model. I think that's a big deal. That is effectively a busted growth story, right?
Well, what about the pandemic? Tesla's had their factory shut down for 3 or 4 weeks in China. They had their factory shut down for 7 or 8 weeks in Fremont. Tesla's inventory is very low. It's 17 days of supply versus other automakers are generally around 85 days of supply. So you've got 2 weeks of vehicles on hand. If you're shut down for production for 8 weeks, that doesn't work. You can't continue to grow your revenue without producing vehicles. So how does that should be a major consideration when we're talking about Q1 and Q2.
Right. There's an easy way to look at that. Every automaker was affected by the pandemic equally.
Differently.
Right? So you look to market share. So what I do is I look to market share. So what has Tesla's market share done fourth quarter of last year to today? Right. Fourth quarter of last year in Europe, their market share was about 35%. Today, it's about 9%. So everybody was affected equally. Tesla is hemorrhaging market share. In the U.S., right, their sales are declining. In China, they're not hitting their numbers. So everybody was affected equally. So to say it's pandemic, that doesn't pass the sniff test because they're losing significant share in all of their key markets. And keep in mind, right, we haven't even seen the effects of the Mach-E in the United States. We haven't seen the effects of the ID3 or the ID4 from VW. We haven't really seen the effects of the Taycan. We haven't seen the effects of the 12 EVs that GM's launching between now and the beginning of 2021. The competition hasn't even started to arrive yet their market share is imploding. So you can argue
that's not accurate. Their market share is not imploding. If you isolate on Europe, sure, but Tesla's not going to ship a vehicle to Europe if they can sell it in the United States. It doesn't make sense. So it's not fair to look at Europe, specifically in Q1 and Q2, when there were shutdowns in the United States factory, which they used to produce vehicles for Europe, and then assume that Tesla's demand is cratering in Europe because they couldn't ship vehicles over there.
Tactic number 5. Cherry pick some data. Pretend that it means something that it does not, and attempt to trick the people whose IQ is low enough that it'll actually be believed. Not picking on people who are on a lower end of the intelligence spectrum. I'm just saying that you would require a low IQ to actually accept this point as valid.
Every automaker.
What do you mean it's not accurate? We have data. Their market share in Europe has went from 33%
That's
to
Europe.
single digit.
Why would we not
What do
talk
you mean
globally?
that's Europe? Europe is the most important EV market in the world right now.
Why would we not
Well,
talk globally?
How can you just say that's Europe? How can you just say that's Europe? Forget about Europe.
All right, so let's
their
look
US their U.S. revenues peaked in the fourth quarter of 2018. So
Let's look at some
when you
numbers
say,
here.
well, they can sell in the U.S., they haven't sold more in the U.S. than they sold in the fourth quarter of 2018, despite the fact they have a new model. So clearly things aren't going well in the U.S. either.
So let's look at some numbers. Here are Q2 results from every automaker. Tesla's sales were down 5%. Everybody else was down 40% on average. Obviously a lot of variance between automakers, but I think, BMW and GM performing the best around down 24 versus Tesla down 5%. So how can you say that Tesla is losing market share globally?
Because they are. I mean, how can you show revenue growth and then attribute that to market share? Well, sales units, but
that is market share.
GM. You're looking at GM sell of everything they sell. They sell EVs. They sell pickup trucks. They sell regular cars.
Yeah.
Again, I don't know how you can argue that this point is not. You can't argue this point, right? I'm looking at Europe. Their market share has went from 35%.
Why would we focus only on Europe? That's my question.
Right. So where are you saying they're gaining
globally
market share, and where is that data?
Globally, and that's what I was just showing. So if we go back to that, this is sales units in the second quarter. Tesla was down 5%. Everyone else was down 40%. Tesla gained share.
Yeah, what are these units?
The math works.
I can't even see what you're showing me here. What are these units you're showing? What are these units?
It's just deliveries, sales units, however each automaker defines it. This is the results. And if we want to look at strictly on revenue, the results are similar.
How can you compare a company that only sells EVs to a company that sells, pickup trucks, regular cars, light vehicles, trucks, etc.? That's not comparing apples to apples. You're comparing apples to oranges.
Well, you're paying cars to cars.
I don't think that's a fair comparison. It's not a fair comparison. You can't take a company that sells 11 million cars a year, vehicles, and then compare it to a company that sells 375,000 EVs a year and say in the first quarter this guy's revenues were down this much versus this guy's units being down, or units were down this much versus, and then say they're gaining market. That's incorrect. You have to have EV data
in the total
from every
automotive
single company, and that's the data you have to compare to.
I don't agree with that. 95% of people that buy Teslas are trading in internal combustion engine vehicles. It's not just an electric vehicle market.
Okay, I mean, so I disagree with the analysis you just put forth. I think you have to compare EV. When you look at Tesla's market share, you have to look at it from an EV perspective. That's what we do in Europe. That's what you have to do in the U.S. and China. We can say theoretically, people buying EVs, buy, ICEs, etc.
It's not a theory. That's
when
the
you look
number.
at market share, you look at it as a percent of EVs.
Oh dear, get it? Because he's got a thing that looks like a dead deer on his wall. Get it? That was really funny. Seriously, is he serious? I don't think he is. No, he's definitely not serious. He's just trying to skew the data in his favor. There's no question. He's not that dumb. It is not possible. It's just not possible. All right, guys, we need to do a few more numbers. I promise it will not be as traumatic as high school math. At least I hope not. Are you ready? Remember that example earlier I talked about the market size doubling, 0.25%, 0.5%, 1%, 2, 4, 8, 16, etc. Well, just imagine instead of a percent, we're talking about total unit sales, okay? This is really important. Tesla could continue, let's say, for example, if they were growing their deliveries by 50% every year, they could keep doing that. And simultaneously, given that the entire global EV market is growing, simultaneously, they could be losing EV market share because the EV market itself is expanding, and the more people making vehicles that are electric, the more vehicles that are being sold that aren't by Tesla that are also electric. This is another trick. Tesla can continue to grow sales ad infinitum while the market itself expands and yet still be shown to be losing market share in pretty much every market you want to pick. It's just the logical conclusion. This isn't a meaningful metric, okay? Total unit sales matters. Growth in unit sales matters. Global sales of vehicles matters. Tesla's relative market share within the EV market itself does not matter. Guys, I need to call it a day on this reaction video. There's going to have to be a part 2. I'm too wound up now. I need to get under a barbell and do some squats to blow off some steam. I cannot deal with this level of deception and dishonesty. Is it possible that maybe GJL Research has some funding from some people that may incentivize Gordon to say some pretty dumb shit? I didn't say that out loud either. You guys imagine that too. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. P.S. Gordon, mate, I would love to chat to you. Just be mindful. I'm not as polite as Rob. A little bit more abrasive. A little bit more direct. But I'd love to talk. I'd really love to get to the bottom of this and understand, do you really believe what you're saying? And don't forget your free stocks with WeBull and stake using the links below. Deposit $100 in your WeBull account and you'll get a free stock valued up to $1,600, and stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.